Yesterday wasn't enough. Here we go.
Back for more.
Let's go at it again this morning. We closed yesterday on the topic of the use of contract revenues as matched to 5311. And we're going to continue the theme of that discussion this morning with looking at other creative and innovative ways to do match. And I just want to revisit a couple of things that we talked about on contributions and donations. They are allowable to the extent that they're necessary for the transportation project. In other words, putting in lawn mowing, lawn maintenance services for a facility that was unrelated to transit, as my friends did in Anson County, North Carolina, that could have been a contributed services, but it didn't benefit the transit program, and as a consequence, was disallowed. The other thing is you have to have a proper evaluation to the goods, service, or equipment that was donated to the transit program. And you can accept contributions and donations from yourself. You can provide office space for your transit program. You can provide other things for the transit program on an in-kind basis, or those donations can come from outside third parties, such as the accounting services that I referenced yesterday. If your transit agency makes a donation, you cannot count that expense against your 5311 grant. You're not allowed to make contributions. So if your nonprofit agency or your municipal county government participates in the United Way Fund, anything that the organization contributes is not an allowable expense. The value of services, property, or goods donated to you can be used as part of the local match. It creates a little bit of an accounting issue for you because you've got to record it in your financial accounts as both as a receipt, and you've got to record it as an expense. The problem is you cannot be compensated for the receipt of a donated item. So if someone donates 10 hours of accounting services at $60 an hour, total valuation $600. $600 can be used as local match to the 5311 program, but you cannot claim the $600 as an expense and then draw down 50-50 participation by 5311. The donation can only be used as match. It's never recorded as an allowable expense in the transit program's accounts. And we frequently see that's the major error that's made when accounting for donations and contributions. There are plenty of articles, particularly in the nonprofit sector, on the proper accounting treatments of how you record that the value of the donation as an expense so that it doesn't show up as something that you attempt to bill to a grant agency. And I would just refer you, it's kind of a little bit of an accounting shell game. You have to create a dummy account in most instances just so that the accounting equations, expenses versus revenues, are in balance. But I just wanted to go over the fact that you cannot get reimbursed for something you got for free. It makes common sense. That's always been the case. So again, you've got to show it as both an expense and revenue, and you've got to have, better than the average there in terms of your financial director in order to keep your auditors happy in the value of that donation. So they've got to be verifiable. If you can't double dip with donations, you can't take that accountant's services, the $600, use it to match 5311. You can't take the same contribution and use it to match Title 3B. It's subject to the same allowability standards. So if someone donates alcohol for the driver's picnic, it is a contribution, but it doesn't count as either a revenue or expense because it's unallowable. When the employees of another organization contribute time to you, you can value that time based on what their salary is as paid by their home organizations. So if this accounting service that I've spoke of donates 10 hours of my time, I would go to ask the accounting company, what do they pay that accountant? And if it's $60 an hour, $80 an hour, that's the value that I can use for those services. Whatever he makes. Similarly, if a lawyer volunteers time to work on your behalf pro bono, whatever the law firm pays that attorney is what you can charge as the value of the contribution. The most common contribution that we see in rural transit is that of volunteer driver. And quite frankly, what I observe is you guys underreport the possible value of that donation. Perhaps for lack of knowledge or lack of a better understanding of this particular obtuse section of the super circular, you guys will go out and value the contribution at the current minimum wage rate. But in fact, what you can do is create a valuation that's based on what you would actually pay for that service had they been one of your employees. So if the average salary of 10 of your paid drivers is $12.50 an hour, you can value the contributions of that volunteer driver at $12.50 an hour. And you would want to keep documentation as to how you came up with the fair market value of that contributed labor. You would show the hourly rates of your paid drivers. You would show the average computation that you did in Excel, and you print that out and keep it in your records for review during the audit. And you'll be okay. If someone donates equipment and supplies, and what's the term that these auto dealers use when they bring a new car on the lot and they give it to one of their salesmen, they run it around for a couple weeks or months, and then that vehicle becomes, what, a program car. And then they sell that program car as a slightly used vehicle, but sell it for a little more money than a used vehicle would be. They created this special class called program car. It's not uncommon. It doesn't happen every day, but it's not uncommon for an auto dealership to donate perhaps a minivan or something like that to the transit system to assist you in transporting transit disadvantaged individuals within your service area. When you go to the valuation process for donated equipment, the important thing to remember is it's the value of the equipment at the time of the donation. There's a concept or an acronym, FMV, fair market value at the time of the donation. So you can't take the sticker price of the vehicle, even if it's only got 4,000 miles on it. It's still a used vehicle. You have to get independent, objective evaluation of that property. And oftentimes we don't have that capability in-house. We have to go solicit third parties who are independent and objective to give us a valuation. I would get that in writing. I'd get it from at least 2 sources, and I would stick that in my documentation file when I claimed a $29,000 contribution from Jones Ford. Similarly, if someone donates office space, its current fair market value of comparable office space within your community. So you gotta typically talk to a real estate agent in the commercial sector if someone is contributing office space in order to come up with a reasonable assessment of what the value of the contributed office space is. Auditors will look at this, probably improper valuation or overvaluation of contributions is the second area where systems get into trouble. They're a little desperate for local match. You really want to make that valuation as high as you possibly can, and no one will curtail your efforts to do so, but you've got to stay within the lines of reasonableness. Typically, when you get two independent appraisals of fair market value, you would normally take the midpoint of those two value estimates. And that's what I would do in assigning value to the contributed good or equipment. If someone donates a building, it gives you a building. That rarely happens. I can't actually think of any situation where that's happened in my experience in rural transit. There are some other rules you need to be aware of in terms of valuation. When you get into big ticket items like that, my advice is to immediately contact GDOT, should this ever happen to you, and seek advice on how to value fair market value, especially on real property. Again, some of the things that we find is that you take the contribution, but you make up your own value. It doesn't represent fair market value, or the auditor can't find any record of what homework you did do at the time of donation, because the audit might occur 9 months later, and then you don't have the records to back up how you arrived at $29,000 for that Ford minivan that had 4,000 miles on it. He'll disallow the value of the donation, because the auditor's only choice. So you got to be careful here. Keep proper records.
When you're doing a vehicle, do you do the depreciation, or do you do the whole value of it, and then does the value go year to year to year, or is it, you can only use it one time?
Yeah, so the question is, would using straight line depreciation of a vehicle be an acceptable method to create a value on that donated vehicle? You could do that. Generally, a vehicle, though, doesn't depreciate on a straight line. There's a dip immediately after it goes into service, and then it's only in the 3rd to 5th year of useful life does the devaluation of the vehicle approximate a straight line. Generally, I find it more beneficial to the transit agency if they go to 2 other dealerships and ask for an appraisal of the vehicle, as if you were trading it in. Most everybody will give you a written appraisal of what they would pay for that vehicle. And I'd get 2 of those. It will be probably higher than if you took straight line depreciation of the fair market value of the purchase price from time of origin.
But do you use that in a 1-year period, or?
Well, you can only count, you can only count the value. Most systems will count the value of the contribution all at once.
Okay.
And And since depreciation is an allowable expense thereafter, it's really not a grant matter. It's an accounting matter. It is now your asset. It'll go on your books as now you are the title holder. It's an unrestricted asset because there'll be no liens on the property. And then typically you would depreciate a vehicle on a straight line depreciation for your accounting records. But as far as GDOT would be concerned, it would be a one-time transaction. You would record the value of the vehicle against the current year grant. You take the $29,000, that'd be it. Next year's grant wouldn't see any pluses or minuses, expenses or revenues associated with that transaction. I don't know if it's a problem in Region 4. Up in Region 5, which is the Chicago FTA regional office, we had a vehicle contribution issue with the Indiana DOT. They were unaware that they were going to get a vehicle during this fiscal year, and therefore the value of this in-kind contribution wasn't in their grant application. But they weren't going to look a gift horse in the mouth. They accepted the donation. And then in midstream, wanted to take the value, and they did, and Indiana DOT permitted it. In the state management review, the reviewer disallowed or issued a finding relative to that donation because in FTA Circular 5010, FTA says they must approve all in-kind contributions in advance, and that Indiana DOT did not seek FTA's permission in advance when they submitted their program projects. That's one of the dumbest FTA decisions I've ever heard. There are a lot of small nickel and dime donations that 5311 systems claim all the time. And it's a level of work that they don't have the staff to process, to understand, because they have no relationship with the 5311 system. They delegate all administrative responsibility to whatever agency the governor designated as responsible for administration. It's just a dumb decision, and it restricted to Region 5. I don't think anybody in Region 4 would be so dumb. But generally, if you can learn in advance that someone's contemplating giving you a donation, alert the state, and let them know so that they can show that they were aware